I'm going to buy Tesla now. I was so wrong, oh my god. That company's definitely worth more than $1 trillion. Screw maxing my IRA, hey. And putting money in that sweet vete, hey. LaFufu was right and I was wrong, I just bought his course for $20,000. Woo! I'm just kidding, everybody. Welcome back, Strongman Personal Finance. If you don't know who I am, you better freaking subscribe to my channel. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term boglehead investor. And I'm author of the book, Stop Being a Broke Loser. It's on Amazon. I know it's expensive. It's like $13 now, plus shipping and tax or whatever. But LaFufu's course, or Meat Spin Kevin, or I call him Meat Breath now, their courses are way more expensive. Anyway, welcome back to my channel. Today is my favorite time of the year because now that the new year has begun, I can max my Roth IRA for 2022. Wow! That's normally what I do. Now, there's multiple ways to max your Roth IRA. You can do it over a period of time, or you can do it all at once. I prefer to do it all at once. Why? Because I don't want to spread it out. I don't think timing the market works. So it's up to you. You can dollar cost average over next year, or you can just chunk it in there and not worry about it because you're not selling it for 20, 30, 40, 50, 60 years. But, you do what you want to do. So what is my plan, ladies and gentlemen? Have I deviated from my strategy, my investment deliciousness? What is my strategy, you may ask? Well, I live below my means, and I max my tax-advantaged accounts. That's my Roth IRA, my wife's Roth IRA, and my 401k. And I do that every freaking year. And in those accounts, I buy the VT ETF, or the equivalent that I can get, especially in your 401k, because sometimes you might not get VT. I max it out, and I buy the Vanguard Total World Stock Market ETF, or index fund, or a close approximation to it. I own the world at market cap weights. That means the larger companies are more represented in my portfolio. I don't try to time the market, and I own the entire world, not just the United States. I know the US was Big Daddy over the last century. I don't think that's going to be the case going forward. I think the US will always be a great country, but I don't think it's going to be the super dominant ultra superpower, and I don't think it deserves to have like 65% of the world's stock market capitalization. It's pretty freaking nuts. So I buy the Vanguard Total World Stock Market Index Fund. Let's go check it out, okay? There's an ETF version, and there's an index fund version. I buy the ETF in my brokerage in Fidelity, and in my thrift savings plan, my military and civilian retirement plan, I have to buy mutual funds, but I actually don't have access to China. So I might actually roll those out, but that's another story. Anyway, this is the Vanguard Total World Stock ETF. Now, I want you to think about one thing. I don't want you to worry about the past performance. I only want you to fixate on diversification and fees. Because what you learn after you invest for a long time is that even though a fund may stomp VT or even VTI, which is the US stock market, nobody actually gets those returns. Nobody really has the patience to buy and hold a fund. So if you're looking at VT and you're like, oh my God, it hasn't done as good as QQQ or Tesla, la Tesla. I don't freaking care. Because I guarantee you, most of you freaking clowns buy a bunch of random ETFs. You don't know why, because they sound good. And you probably sell them within a freaking year, okay? But if you stick to VT, you own the entire world, you don't time the market, and you grow your wealth as the world's companies become more profitable, more productive, et cetera, et cetera, et cetera. I'm an optimist. I think the world's going to be a better place in 30 years. There's going to be ups and downs. There's going to be drama and emotions. But I just let it play out because I'm a very optimistic person, okay? I believe in humanity. Unless we fall to communism, then we're screwed. Anyway, here it is, the Vanguard Total World Stock Market ETF. Now, because it's an ETF, you can't automatically contribute to it. You actually have to buy it when the market's open. It trades like a stock. If you just want to set up an automatic contribution, and we'll check it out in a second, you can go to VTWAX. We'll look at it. So what does it do? It invests in both foreign and U.S. stocks. Basically all of them. You own every company in the world, basically, that's publicly traded. It tracks the performance of the FTSE Global All Cap Index, which covers both well-established and still developing markets. You own them all, not just the ones that did well recently. I know, it's crazy. Has high potential for growth, but also high risk. In the short term, I think it does. Share value may swing up or down. This is crazy, okay? Stocks can go down. Even VT can go down 40 or 50% or more. It's entirely possible. So I don't want to hear your crap if you buy VT and then it freaking crashes because, I don't know, there's a global nuclear war. And you're like, strong man, I thought VT only went up. Like Tesla. It's not how it works, ladies and gentlemen. You're buying and holding this for the long run. I don't care if it goes down 20% the day after you buy it. It doesn't matter because you're investing for the long run. Put the money in. Don't look at it, all right? And if you sell out of it, then you're a chump. So here we are. World stock, ticker symbol VT, very hard to remember. 0.08% expense ratio. It's basically free, okay? I know you have to pay a little bit of money to people to manage your fund. Now, let's look at the composition. Let's look at the top 10 holdings over here, right here. Apple, you ever heard of that? Microsoft, Alphabet, Amazon, La Tesla, Nvidia, Meta, Facebook, and then we have some foreigns. Taiwan, well, Berkshire's a domestic company. That's Berkshire Hathaway, Warren Buffett, and JP Morgan, okay? But you can actually go look at all the holdings. Now, it's a stock fund, and it has 9,251 stocks. You can sort it by percentage of the fund, number of shares, market value, yada, yada, yada. So let's see some of the smaller companies that we own. Raiffeisen Bank International, P&M Resources. Yeah, I've heard of these. Rimgrow Limited, Element Fleet Management Corp. Man, these are some 10x stocks right here. Now, you're going to own a bunch of companies you never even freaking heard of, but that's the beauty of this fund, okay? You own them all. If one explodes, you benefit from that. If they all go out of business, especially these small caps, you don't have to freaking worry about it. But you are massively, massively diversified, okay? Now we can look at the opposite way, biggest to smallest. So Apple is the largest percentage of this fund, and it's 3.37%. You go look at some other funds, other ETFs, and they're all tech. They're all like 20% Apple, 20% Tesla. They're a freaking joke, okay? Here, you're diversified, but you're not ultra hyper super concentrated in one or two freaking stocks. Even if Apple went to zero, you'd be just fine, okay? Or Tesla, which is now 1.19% of VT. Sadly, I own Tesla and VT. But it could easily drop 50 to 100%. And if it does, I don't care because it's such a small part of my portfolio. But look at all these beautiful companies. Netflix, MasterCard, Salesforce, Walt Disney, ExxonMobil, Thermo Fisher, Costco, Roche Holdings. Let's see what else we got here. Alibaba. But it went down strong, man. Alibaba went down. It's a bad company. Toyota. See, you own all the companies in the world. You don't even have to think. Just buy it and don't freaking sell it. Anyway, let's go look a little bit more at BTC. Okay. Let's look at the composition by region. 10% emerging markets, 16% Europa, 10.6% Pacific, 0.2% Middle East. Pretty big part of it, huh? And 63% North America. Now, if that doesn't tell you America's in a freaking bubble, I don't know what does. 63%. But if U.S. stocks keep going up, I benefit from it. But yes, this fund is hyper concentrated in North America. But I think that's going to change going forward. Now, let's see how the performance was, okay? Over a 3-year period, they had average annual returns of 20% per year. It's pretty freaking good. Remember, you can use the rule of 72 to approximate how often or how quickly you can double your money. You take 72 divided by the percentage rate, and that gives you the time period to double your money. 20% over the last 3 years, 14% over the last 5 years, 12% over the last 10 years. If you'd invested $10,000 10 years ago, you'd have $31,000. Now, I know Tesla's gone up, but I guarantee you it's going to go back down. And your long-term return is not going to be as good as this, okay? But you keep buying Tesla, ladies and gentlemen. I prefer to be diversified and, benefit from even stupid companies like Tesla, but not be over-concentrated in them, all right? Portfolio and management. Let's see what we got here. Large blend. So this tilts towards large cap stocks because it's market cap weighted. Larger stocks are a higher percentage. The bigger the company, the more percentage. That's why Apple, Amazon, Microsoft, and Tesla are all on the top because they have huge market caps, all right? But you're also buying a lot of these companies when they're new and you haven't even freaking heard of them, like I just showed you. Okay, so here's some blah, 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 blah. Let's go look at the fees. 0.8%. So if you invested $10,000, over 10 years, you pay $189 in fees. And if you buy this in an IRA, you don't pay any taxes on the freaking capital gains and dividend distributions. So you literally just pay $189 on $10,000 every 10 years. Wow. Now, this fund does have distributions. They have dividend payments, which are freaking pain. I hate dividends. And you don't really get a foreign tax credit because the percentage of foreign stocks in the fund isn't that great. But the reason this fund is so beautiful, and I'll just say it over and over again, it's not because it's gone up faster than anything else. It's because you have to remember, most people don't get the market return. As a matter of fact, they get way, way freaking less than the market return. So if you look at this and you just buy it and hold it and you don't think about it and you just leave it there and you dollar cost average into it, you're going to get the market return. Whereas all your clown peers are going to freaking trade in out of stocks, pay high taxes, lose a lot of freaking money on YOLOs, and they're going to be broke freaking losers. Now, I am going to invest in my Roth IRA. This is a tax advantage account. Roth IRA. You pay your taxes before you put the money in. It grows tax-free, and at 59.5, you can withdraw it tax-free with no required minimum distributions. So once you pay the tax, especially me, I'm in a lower tax bracket right now. I think I'll make a lot more money when I'm older. You're in a low tax bracket now. You want to use the Roth IRA, okay? And then you'll never pay freaking taxes again, ever. Unless the communists change that, which I'm sure they'll try to. You have $1 million? You're a bad person, even though you saved diligently your whole life and live below your means. I'm going to take your money now. An IRA is an individual retirement account in which you contribute after-tax dollars. Your earnings are tracked tax-free. You can withdraw them tax-free. Other advantages: no contribution age restrictions. You can contribute at any age as long as you have a qualified earned income. You actually have to have earned. You have to have a job, basically. You have to make money to be able to contribute into it. There are no mandatory withdrawals. That's huge, allowing your savings to grow even during retirement, or you can pass it on to your heirs. And there's no income taxes for inherited Roth IRAs. If you actually want to give it to your heirs, they're freaking losers. Now, the important thing is contribution limits. You can put in $6,000 a year if you're under 50, or $7,000. You have a catch-up contribution if you're over the age of 50 or older. So if you're old and you're on Social Security, 62, you can still put in $7,000 as long as you're freaking making the money. Okay, you gotta have earned income. But if you're under 50, like me, sexy me, you can only put $6,000 a year. But if you have a spouse, even if she or he's not working, you can also contribute to their IRA. It's called a spousal IRA contribution. So, as soon as the market opens on the 3rd, I have a couple bond ETFs, short-term bond ETFs. I'm going to sell all those. I'm going to sell them in my wife's account. I'm going to move all that money, $6,000 each, directly into each of our IRAs. And boom, $12,000 that I never have to pay taxes on again. It's a good deal. You need to freaking do it, okay? Max your IRA. Don't listen to freaking losers like Lafufu or whatever that tell you to trade in and out of stocks and never pay taxes again. And buy investments that are actually going to grow and build wealth long term. And buy and freaking hold them, okay? I know it's hard. It's so hard. I want to trade Tesla. Shut up. Anyway, that's it. Like, subscribe, tell your friends about me. You'll have a wonderful day. Cheers!